Good afternoon, everyone. My name is Saurabh Tewatia from Group 10, and this is our E&I term project. And the industry that we have chosen is retail bank. So these are some of the topics that we'll be going through in the presentation. Now, starting with the introduction. So I'll be talking about what is retail banking. So basically, retail banking, also known as consumer banking or personal banking, refers to the services provided by financial institutions to individual customers. These services include deposit accounts, loans, credit card, mortgages, and other financial products and services. Retail banking is a critical component of the overall banking industry as it represents the primary way that the bank interacts with consumer and small businesses. So the retail banking industry has undergone significant changes in the recent years due to the emergence of digital technology and rise in the disposable income. And at last, for India, if I talk, the retail banking is one of the biggest industries in India right now, with a valuation of around 2 trillion US dollars as of 2023. Overall, the retail banking industries plays a vital role in the economy by providing individuals and small businesses with the financial products and services they need to manage for their finances and achieve their goals.
So my name is Gaurav Nandi and my roll number is 22PGDM 228. Uh, I will discuss about the current trends in the retail banking industry. The first one is the digital banking. Many banks are investing heavily in digital channels such as mobile apps and online banking to provide customers with a seamless experience. Uh, so banks are ensuring nowadays that customers do not have to visit the bank physically and they can perform all the banking activities from the comforts of their home. The second one is the artificial intelligence. AI is being extensively used by banks for a variety of purposes, such as fraud detection, customer service, and personalization. Banks are also using AI-powered chatbots for for increasing the efficiency of their customer service. Large private sector banks such as SDFC is extensively using AI-powered chatbots to improve their customer service and resolve customer queries in an efficient manner. The last one is the personalizations. So banks are increasingly focusing on leveraging customer data to offer targeted products and cater and fine tune their marketing communication campaigns according to the needs and requirements of the customer. So banks are also putting a lot of emphasis on personalizing their banking products that meets the demands of their targeted customers.
So, hi everyone. My name is Bhavish Agarwal, and my roll number is 22 PGDM 273. And I'll be talking about business models currently operating in the industry. So, first is traditional banking model. This is the most common model where a bank offers a range of products and services to its customers, such as checking and saving accounts, loans, mortgages, and credit cards. Revenues generated through interest on loans and fees charged to customers. Second is private bank model. Private banks cater to high net worth individuals, offer a range of personalized financial services such as wealth management, investment advice, and estate planning. Revenues generated through fees charged for these services. The third one is digital only bank model, also known as neo banks. These banks operate exclusively online without any physical branches. They typically offer a range of banking services such as checking and savings accounts, loans, and credit cards through a mobile app or website. Revenues generated through interest on deposits and fee charged to customers. Talking about the fourth model, retailer bank model. In this model, a retailer partners with a bank to offer financial products and services to their customers, such as credit cards, loans, and saving accounts. Revenue generated through interest on loans and fee charged to customers. The last one is cooperative bank model. These banks are owned and operated by their customers who are also the shareholders of the bank. They typically offer a range of products and services such as checking and savings accounts, loans, and mortgages with profit distributed to members in the form of dividends. Thank you.
Talking about disruption in retail banking industry, first let's talk about what is disruption. So disruptive product or service helps create a new market and value network and significantly weaken, transform or destroy an existing product, market category or industry. So the first thing is that is facing disruption is traditional banks. So they are facing disruption from new players such as fintech startups, digital banks, and peer-to-peer lending platforms. So these new players are leveraging technology to offer more customer-centric, low-cost, and convenient financial services and are challenging the dominance of traditional banks. So blockchain technology's rise has also been the reason of disruption in retail banking industry. So the rise of technology and cryptocurrencies such as Bitcoin is another disruptive force in the financial industry. So these technologies have the potential to revolutionize the way financial transactions are conducted and could potentially render traditional banks obsolete. So to stay competitive in this rapidly changing environment, traditional banks must embrace digital technology, adopt a more customer-centric approach, and be willing to disrupt their own business models. Banks that fail to adapt risk being left as the industry continues to evolve. So how disruption has impacted the industry? So the retail banking business has been significantly disrupted by new technologies and shifting consumer behavior in a number of different ways. The following are some of the most affected areas. So talking about the payments. So payments like traditional payment systems like checks and cash have been disrupted by the growth of mobile payments, digital wallets, and peer-to-peer payment platforms. Nowadays, customers anticipate being able to pay fast and simply using their smartphones or other devices. So client experience is also something that the disruption has impacted. People are requesting more individualized and practical banking experiences. Traditional banks are finding it difficult to compete with the user-friendly mobile apps, individualized financial advice, and round-the-clock client service provided by fintech firms and digital banks. So, talking about branch banking, which is another thing that has been impacted by the disruption. So, as digital banking has become more popular, physical bank branches have become less significant. Today's consumers no longer require traditional brick and mortar branches because they expect to be able to access their accounts and complete transactions online and through mobile apps.
Hello everyone. My name is Ansh Saurabh, roll number 22 PGDM 219. So I'll be talking about how does the future with respect to disruption looks like. So, there are some key trends that are likely to shape the future of the retail banking sector. So the first one is digitalization. The shift towards digital banking is expected to continue as more consumers prefer to bank online or through mobile apps. Banks that fail to offer convenient and seamless digital banking services may struggle to retain customers. The second one is personalization. With the help of advanced analytics and artificial intelligence, banks are able to offer personalized services to customers. This trend is likely to continue as banks strive to differentiate themselves from competitors and provide better customer experience. The third one is fintech disruption. Fintech startups are increasingly competing with traditional banks, offering innovative products and services that are often cheaper and more convenient than those offered by traditional banks. Many banks are responding by partnering with fintechs or launching their own digital only subsidiaries. The fourth one is open banking. Regulatory changes such as PSD2 and open banking are encouraging banks to share customer data with third-party providers. This is expected to lead to increased innovation and competition in the sector. The last one is sustainability. Banks are increasingly focusing on sustainability both in terms of their own operations and in the products and services they offer. This trend is likely to continue as consumers become more aware of the impact of their financial decisions on the environment and society. Thank you.